Morning, guys. Let's get right into it. If you're new to the channel, we cover stock technical analysis and we anticipate where the market's heading. So in my last few videos, I talked about a bounce that I thought was coming and how it was going to actually play out. And what I said was I thought we were going to gap up out of this downtrend line right here. And that's exactly what happened yesterday. And that's just, that's just being able to read the market and anticipating how the market's going to act. Typically, when you get a lot of people short, which is what we had after this massive sell-off, a lot of guys who jumping on late, late to the game, late to the party, basically trying to make money after the moves already happened. That's very common. The crowd typically follows after the big moves have happened. That's when they believe it. And that's usually when that move, at least in the short term, is over. And so I was anticipating the fact that we'd had a lot of downward selling pressure. The relative strength index was way oversold. And the let me flip over to my hourly. The RSI, if you see here, like on the weekly, really oversold. I mean, we were down to, about as low as it gets on the weekly for the triple Qs. And the daily was pretty oversold right in here. So we were really oversold. It just didn't make sense for, a big move down. Now, there could have been a little move down. That could have happened, just a fake out move. But again, I saw more opportunity for upside. And I thought, okay, we have this downtrend line. They're not going to give traders an opportunity to just get out of their shorts and flip long intraday the way they'll typically do it, the way the market does it, in order to trap and capture as much money as it can, is to gap. And that's exactly what we saw. So there's your gap yesterday, and we've moved higher now. Now here's the resistance, and I actually took a day trade today on this level, 185.29. And that was your first point of resistance, basically. We get that back from this cluster right in here. You can see that all these hourly candles we held, and we're chopping around that level. So, and I think it actually goes back to here too. Little bit throughout there. Yeah, we've got some support, and you can see the gap around that level. We held support right here on that level. So 185, that's where I got the level, and then we basically moved right into it. So let me show you on the 1 minute. Show you guys how you can do this. So this is what you want to see. This is what I was looking for. So it basically started to rip higher, just straight up, and overshot that level. And at that moment in time, when we were sitting up around here, I was watching it, and I was really focused on, okay, is this an overshoot of that level, and does it start to fail? And sure enough, I saw it start to put in some red candles and start to fail. I got short and rode this thing down. The target was this 179 level. If I go to my hourly, I've got it marked out at let's see where it's at. I had 179 on my trading. Oh yeah, right there. Which is just the bottom. So I marked this out. It's kind of like this halfway point that we've been chopping around. It's about 179, and we've been chopping around this halfway point. And so I marked it out. You could mark it, anywhere. You could mark it right there if you want, but 177. But ultimately, I was looking for 179, and we started to get close, and then we just didn't quite get there. Oh yeah, and you can see right here, several support lines along this 179. That's probably where I got it. Right there, yeah. And you can see we held that level. So we've been chopping around that, that level for the last couple days, yesterday and today, essentially. And you can see we held support there, held support there. This is a head and shoulders pattern right here. Inverse head and shoulders. There's your shoulder, there's your shoulder, a break of the neckline and a rip higher. So that's a technical pattern right there that played out. And so I was looking for it to come down and at least tag that. And I saw we started to struggle, and the sellers started to give up early. And so I cut the short right in this area. And yeah, took home a $820 profit on that. So nothing crazy, but nice little quick day trade for it. Now we've got this level. It looks like it's marching its way back up to here. So 185, that's your level. However, usually the second time it gets there, it's not going to play out as cleanly and nicely. So maybe that we'll run up and tag it, act like we're going to sell off, and then cut through it. And if we do that, we got to look to the next level up. Here's your next level up. Let me go to the hourly here. 192. And that's on the hourly that we get that level. And if we break through that, then I would look at this 202 as your most objective area to establish a short position up around here in triple Qs. Anywhere up in this range, I think, is a good risk reward to start establishing a short. And you could even look at, taking a short here at 192 as well, starting a starter position maybe for a swing trade. Because I don't think the selling's finished. Bear markets don't just die, with a V. I mean, I just don't see this as a V bottom bear market, basically. I think we're in for a longer bear market, and we will have kickback rallies in this bear market, so there will be, opportunities to go long, but the bigger move and the trend, the major trend, should be to the downside. Again, I don't know. I'm just going against probabilities. But this is what the chart tells me. The chart says that, I'm going to move up into some of this resistance, and then I'm going to fail and move lower. So ultimately, I think we still got another leg down, possibly more than one, but at least I think we've got a good size leg down. We need to get down to at least 143 on the triple Qs. And that's probably your next leg down, is down to 143. And then maybe we have another kickback rally. And then ultimately down to these levels, 115 and 100, basically 98, somewhere in there. We'll start to see things start to settle down a little bit. And, all the quantitative easing programs will be out there, and all the news, everything will be, bad. But I think we'll start to find some short, medium-term support somewhere right in here. Maybe we have a sustainable rally that lasts, months once we're down here, maybe 6 months or so. And then we'll have to see. The bear market could be over down here. So I don't know at that point. I'll have to just, read it as it comes. All right, let's jump into some stocks, look at some stocks. We've got Apple here bouncing. Your major resistance is right up here, this black line. That's really the most major resistance in Apple. We do have this trend line right here. We got, we undercut it, so I guess we can say that held as support, or we could also mark out this level. You can see that we held this level right there. That's a more relevant level, I think, right there. We had a lot more reactions around that level, but we'll leave them both up. You can see we undercut this level. So that's good to see if you're, that's a nice clean hold of support. And when you see the undercut, the reason why I like to see things overshoot and undercut is because that's your stop rate. So anybody who was short thought they were in the money when things are, great. And anybody who wanted to get long or had, was long and established some stops, they raid your stops. The algos basically see the stops, they raid it, and then they take your position basically, and that's just how the market works. So usually when you see overshoots or undercuts and then a reversal, that's a nice clean, that's something you can trade off of, and you can establish that as, okay, that held as support. That is a valid trend line and level. So now we're moving higher. Apple is going to run into resistance. They should actually, you could mark this level out. It's not the cleanest, but yeah, we do have some reactions there. You can see we had this candle, then we held this level, then we came down and held that as support right there. And then again, it held that as support here. And then if I zoom in really close, you can see close that candle right on that level. And so maybe that could be it for the rally here in Apple before the next leg down. So we'll have to see, but I think it's probable, but that's it for the rally for Apple. And if it wants to move higher, then I would look up around this level to be your next major level of support, or sorry, resistance. This is a major level, so anything up in this area, you've got really heavy resistance. The sellers should step in. Microsoft, this one's held up a little bit better. Microsoft, when I look at, still within trend. Everything is still actually, everything's bullish actually on this stock. I mean, I don't see, we had a major pullback, but still held its trend, its uptrend, still within trend, has not broken trend. So this is still a bullish stock. You can continue to own this thing long if you, as long as it remains bullish. However, I think given the major indices, you don't have the markets in your favor, so you're kind of swimming against the current on this one. So, you'll have to watch that. I wouldn't, I do anticipate a breakdown in this thing sometime soon, but again, as of right now, still bullish. Let's look at ExxonMobil's interesting because this thing, sold off pretty massively. There's one thing that I'm kind of trying to investigate, I guess, and with the huge money pumping scheme that they've been doing with the Fed, I'd expect to see the dollar falling, and I'd expect to see commodities moving higher because they're priced in dollars. And so I'm curious on how the oil trade actually starts to play out or shape up. I would expect that oil would move higher, the commodity of oil, and with that you would see the oil producers and the oil conglomerates move higher as well. So we'll see. I haven't taken a position on this yet, and I still want to see what happens in the general markets, but it's interesting is what I'm saying. The bonds. So the Fed has started to support the bond markets. You can see all of a sudden everybody wants to own bonds. Well, nobody wants to own bonds. The Fed's buying all the bonds, basically. The Fed is pumping trillions of dollars into the bond market. That's what their major effort is to support the bond market. Credit markets are major markets. The world and America's economy pivots off of those credit markets, and so they're stepping in and printing cash and buying bonds, and you can see that there in BND as well as LQD. This was the trouble child that I said that where the bubble actually exists, and that's in investment grade corporate bonds. If these things get downgraded, there's going to be a world of hurt, and I think they will. I just think that's going to happen on your next leg down. So when the Qs gets your next leg, Qs goes to your next leg down, you'll start to see the downgrades. This thing should start to sell off some more, and then you'll see the Fed probably having to step in and pump more money. But at this point, they've kind of told the market that they will print as much as they want to. There's no limit, so they probably won't be announcing how much more they're going to be printing. They're just going to be doing it. So if there's downgrades and major sell-off, the Fed's just going to step right in and print a ton of money. And that should play into our gold trade. So let's flip over to that and look at that. And this is interesting. Here's the dollar. Been watching this one closely. So the dollar has been getting really strong in this market sell-off as there's been this rush to cash as people have just clicked the sell button on their stocks, received dollars for their stocks, and then just held those dollars kind of, starstruck, I guess, and not sure what to do. So they just sit on dollars. And that's, I think, what's attributed to this major ramp up in the dollar. But we broke trend, so I think we're heading down now. Here's your trend line on the hourly chart, and this is the entire ramp up. Nice clean trend line, held that. You can see even a reaction right there, still moved higher, and then we broke trend. Now we're back testing. So here's a back test. So, for that, we could look at shorting the dollar. Yeah, and if we want to short the dollar, we could look at, I think, UUP. Which one's the... Well, you could short UUP, I suppose. It's a bullish ETF. Now, it doesn't move a whole lot, so you'd have to take a larger position. And depending on, how much you have in your account and all that, that might not make sense. But still, here's your ramp higher. This thing's already started to move, it looks like. Started to move south. So the DXY has just broken trend, but the UUP it looks like it's already started to top out. So yeah, that looks good for a short, basically, based on the DXY. Going back to the DXY here. And you can see, I mean, we're basically right in that area where you could short the dollar. I mean, it's back testing. This thing doesn't move a lot, so it's just gonna, it's gonna probably work its way lower. But at the same time, it looks to me like a good short. So I expect this to, maybe it'll tag the trend line and then start to go south. So yeah, there's a trade idea, UUP. Let's look at gold. Here's gold futures. Gold futures also broke trend. Here's your uptrend that they've recently done. I noticed that last night we broke trend, and we've started to head south a little bit. But the major trend is still up. If I go to the daily, here's your major trend, and you can still see that we're still trending higher. So even though we broke trend on the hourly, we're getting a pullback. The major trend's up, so still bullish there. Gold bullion still bullish. The weekly, notice the weekly, we're back above. Now the week's not over. Need to see what happens on Friday. They could sell gold hard into Friday and close us back below this pivotal 1570 on the weekly level. But a close above 1570 would make this a false breakdown and a bear trap, basically. So you can see 1570, that's a major level. We get that back here from these levels, or from 2011, 2013, things like that. And then rolling in, we had the breakdown, close on the weekly. Everything looked bearish. Gold looked like it was going to break down. And then so far this week we're ramping higher. So back above that 1570. If we close the week above, that's a false breakdown, a bear trap, and that's pretty bullish. So that should give us the momentum of the people who shorted gold, who are covering. That should give us the momentum with a weekly close to get us up to this. I marked this out as 1785. I see a couple reactions. One, cluster right here, and cluster right here on the weekly chart. And this 1900 was really just the blow off top in that bull market. So we're going to leave it up here at this 1783, but a close at weekly above 1570 should give us the momentum to run up and tag this 1785. So that's probably our next target. Gold miners had a huge day yesterday, and so far looking good. Everything still looks bullish. This is Barrick Gold, one of my favorites. And we had the big false breakdown where it was a great opportunity to buy, which is what I did on that day. And we had this downtrend line here. Here's your purple downtrend line. We opened below it, and just the momentum, like the buyers stepped in rapidly and bought it right back up, right above that support. And as they were doing that, I noticed it. I was buying as well. Closed way up here. It was a huge day and a big reversal. So far so good on Barrick. Everything continues to look good. And if you guys get scared of these, or you're shaken out on these big moves, because these things do have big moves. I mean, they're up and down. They're really volatile. Then flip out to the larger time frames. The weekly, you could go to the monthly. I think the weekly's, my preferred largest time frame when looking at kind of swing trades and stuff. But go back and just look at the weekly and draw your trend lines out, and then just look at the price action. You have higher low. Here's the end of the bear market. Then you had a higher low, higher low, higher low on the weekly, and there's nothing broken about this trend, is what I'm saying. So, and funny enough, I bet if I draw this out down here, it probably lines up with that. Let's see. Yeah, about there. That's actually a better trend line right there. Now we have 1, 2, 3, 4 data points. So nice clean up trend on the weekly. And, so far that has held. So that is valid. We're still in an uptrend. And you can see we've got this top right here at this 2146. If you mark that out, I believe we probably get some reactions, and it gets a little choppy back there. But recently, over the last few, since 2013, this has been the plateau. You can see this has been strong resistance, and we've held that resistance each time. Even just recently, we ran up, overshot it, and then it rejected and held as resistance. But now, if we're going to move higher and the bull trend is going to stay intact, then we should break this resistance. And this is a rising triangle pattern, which typically they break to the upside. Probability says it does this. So if we break to the upside, then we have to look at the next levels on this. And really, we do have a level right in here, right about somewhere right in there. This is a weekly chart, so I'd have to refine it back down on the daily, but somewhere right around 28 bucks, 27, 28 bucks. And then above that, you've got 54 bucks. There's really nothing. I don't see anything extremely clean that says we've got some sort of resistance. Well, it looks like we do have a level right here. And I can see that because if you roll out, you can see held that as support, held it as support, support, broke, resistance, resistance. So there's another reaction right there at 42 bucks. So we'll leave those up, and we'll just see how this thing plays out. That's it for the video, guys. Let me know what you guys think. If there's any stocks or comments you guys want me to respond to, leave it in the comments below. I try to respond to most of the comments. My channel's not that big, so I'm able to do that, and so I appreciate the interaction. Give me a thumbs up, subscribe if you're new. We'll keep the content coming. Thanks, guys. Talk to you later. Bye.